Hey everyone, welcome back to Mad Hat Maddie's Wealthy Habits to Live By. Today we're talking about the stimulus checks that are coming in the mail. Some people are getting them as a check, some are getting them direct deposited, which is changing how quickly we get them. Long story short, I don't have mine yet. I know a lot of people that have gotten them directly deposited into their bank accounts already. That's fantastic. $1,200 is a lot of money, and for a lot of people, they haven't seen that sort of cash all at one time in a while. So I want to break down some great ways that you can utilize this money. Um, these are all my opinions. Please do your own research before you do any of these things, but I hope this video is helpful. Here's Mad Hat Maddie describing what to do with your stimulus check.
Hello, mate. Have you got a new stimmy check? From what I'm hearing, lots of Americans are getting their stimmy checks, and I just want to shoot a quick video here to explain what to do with the money. Because, as we know, it's a lot of money. It could be $1,200 for a lot of people, maybe $2,400 for families, and I think it's very important that we don't waste this money. This money is being pumped out by the government in order to keep the economy afloat. They are giving us money so that we can invest in ourselves, invest in small business, invest in the economy. And I think what is going to happen is a lot of people are going to see this extra money. It's going to burn a hole in the pocket. And my advice for those people is that they should buy a new pair of pants, that hole in the pocket, and then they should do nothing with the rest. You don't need to spend it right now. This is a great opportunity to have a good chunk of cash for a rainy day fund. That is my first tip of what to do with this money, which is nothing. Quick side note, these are all strictly my opinions. I hope that before you buy anything or do anything with your money, you put your own research and thought process behind it. Please don't just go out and buy things because I said to. Although I do respect that you appreciate my understanding of these topics, please do your own research. Thank you. This leads us to a second bit of advice, eh? And what this is to invest the money into equities or the stock market. So, I have a few very particular stocks that I've been eyeing myself, and I'd like to put them on the table for you to do your research on these stocks as well. The first stock, if you haven't guessed it, is Starbucks. I do love my Starbucks. Now, the reason that I like Starbucks as a potential investment opportunity is it has a very strong dividend payment. And what a dividend payment is essentially you are paid a certain amount per share that you hold. So if you hold 10 shares of Starbucks and the current dividend amount is $1.64. So you own 10 shares at $1.64. Generally quarterly, a company will pay out the dividend. So you get $1.64 times 10 as free money, and you can reinvest that money into the stock, or you can just put it into your account and hold it. But a dividend is generally a very good sign that a company has strong financials. They have extra capital to give back to investors in the company. Now, Starbucks has a dividend payment of $1.64, and the share price is $77 at the moment. So the dividend yield is 1.82%, which is very strong. It's a good payment. The stores are still open. I love Starbucks right now. It's a great purchase. People are still buying coffee, as we know from our last video. Starbucks, before the whole debacle hit in late February, was at about $90 per share. It got down as low as $50 per share, and it is now at $77 per share. The next company I'd like to share with you is called Lowe's, ticker LOW. The company was at $125 before this whole debacle hit, and now we're at about 97. It bottomed at 62. Should have grabbed shares back then. But the company has a strong dividend payment, $2.22 per share, which equates to 2.38% of the current price. I think this company has a lot of room to grow, and the stores are still open. People are at Lowe's and shopping, and I think what's going to happen is that people are going to still need to do home repairs, and they're going to try to find a way to save some money, and they're going to try to DIY, do it themselves. I think Lowe's and Home Depot are fantastic ways of taking advantage of this. I like Lowe's. They're a very profitable company, and I think that the stock price will go up in the long run, and I like that for an investment that I make. Now, my third company I'm keeping an eye on during this period is the Blackstone Group. The ticker is BX. The stock was at around 65 before this whole debacle hit, and now we're at $50. It got as low as $33, and we should have snagged shares back then. What I like about this company, two things. A very, very strong dividend payment at $2.44 per share, resulting in a 5.09% dividend yield. Now, this yield is very high for the industry. The S&P 500 average dividend yield, 2.5%. It is double that. That is very good. Another reason I really like this company, Blackstone Group, is that they are investors in small, medium businesses. But some people might say, well, these businesses might go out of business. Well, those small businesses also need capital and money right now. Blackstone Group has a lot of cash. They are smart. They have cash on hand. That is going to play a big role in the next few months. Companies with capital on hand are going to do very well as companies are reaching for loans. They need money. Blackstone Group has that money and works with small businesses. I like it. Keep an eye on it. As we know, stocks tanked pretty hard after the outbreak, and the drop was very, very sharp. And since the bottom that we saw in mid-March, the stocks have rebounded about 25%, and that is pretty good. But I have a feeling, and this is my feeling, but I believe that stocks might see some more downturn before we have a true correction upwards. So, keep an eye on these stocks, keep an eye on other stocks that you're looking at, but I would be very cautious about purchasing stocks at this very, very moment, unless you are an investor that can withstand some downturn and you are purchasing these stocks for the long run. If you are purchasing for the long term, you will be fine. So I ask you this, what is your investing strategy? If you do not have one, develop one. Is it long term, short term? If you're trying to flip stocks right now with a higher volatility, I might not considering buying these right now, as they have increased drastically over the last 3 weeks. But there may be some buying opportunities in the near future, and that is my opinion. Now, my third piece of advice, and my last, for the stimulus check is this. Pay off some crippling debt. Now, the government has given you some free money for being a citizen of the United States of America. And I think that many, many Americans have some terrible debt. And what I would suggest is that if you can tackle that debt with some free money, you have done very well for yourself, because not only are you reducing that debt, which is less that you have to pay back later, but you are also reducing your interest rates. You're going to pay less interest if you're paying off more of that debt. So I would say find your smallest, most high interest debt, whether that's your car or student loans, and put, or your credit card, and put this money towards that. You don't have to put it all towards it, put some towards it, pick away at it. Maybe put the rest to that rainy day fund. But paying off debt is a very, very smart thing to do. Thank you.
All right, so we have some awesome stocks to look at with high dividend yields. They're very secure companies. They're profitable companies that are well run and have good financials, which is important when you're looking at a stock to purchase. As Maddie said, there is potentially going to be some more downturn in the economy before we see a full recorrection. So be careful investing right now. If you can stomach that downturn and you're investing for the long term, which is advised anyways, you might be okay buying right now. But if you want to try to time it a little bit more and you don't have a ton of capital to work with anyways, give it a few weeks. See what happens. If it keeps going up, that's a great sign for the economy, and maybe it makes sense to buy then. But right now is a kind of a tipping point where it could go in either direction, and that if that's a risk you want to take, that's fine. Remember, you don't have to do anything with this money. This money was given to you. If you want to just put it into a rainy day fund so that if something breaks or you have some medical emergency or you just need that money down the road, put it there. Just leave it. You don't need to spend it right now. Lastly, paying off debt is very important. Tackle that high interest, lowest payment first. Get that car paid off. Get your student loans knocked down a little bit. And you can even do this in 3 months. Maybe just hold on to the money and then apply it towards some debt once you realize that you're back to work and you have some more steady cash flow coming in. That's my advice. I really hope this video was helpful to you guys, and good luck. I hope you get your stimulus check soon, as do I hope I get mine. Thank you. Bye.